Hi, this is Ivan Illán. I'm the founder and chief investment officer at Illán Wealth Advisors Investment Management, also known as AWAME. And as you might see behind me, I'm not in Century City this week. I've been in Hong Kong, and I thought it would be a great opportunity to talk about how much money does our firm invest in Asia, in the greater Asian area. And it may come as a surprise to many folks, but about 8% of our equity allocation, not the entire portfolio, just the equity allocation, is invested in developed Asia, which includes Hong Kong, as well as emerging Asia, which technically still includes China, mainland China. And, this is a very important part of the world. There's a lot of things happening here, certainly a lot of controversy as well, and maybe some tensions also geopolitically between the U.S. and certain nations here in Asia. But at the end of the day, it is a very diverse economic set here when it comes to services, manufacturing, supply chains, and it's rapidly changing and evolving. And so where maybe 20 years ago China was very dominant in this area, mainland China was very dominant, today you see quite a bit of contracts and supply chains moving to other Asian countries like Malaysia, Thailand, Indonesia, India. So it's an important part of a portfolio, and certainly an important part of equity diversification when you look forward. And to this point, if you happen to be on LinkedIn, take a look at one of my recent posts. It came from something I shared, which came from the International Institute for Management Development, which is an economic institute and think tank based out of Zurich. And IMD is the acronym that it goes by. Anyway, every year they run a ranking of economies all over the world, 67 countries essentially that they rank. And for the first time in a very, I think maybe ever, the United States actually dropped out of the top 10 and is now ranked 12th in the world for economic opportunity. So it was mainly because of the employment picture within the United States and also its international trade policies. So what is number one? Singapore. Number two is Hong Kong. And with all of maybe the controversies around the justice system and some of the resignations that we've seen happen within the Supreme Court equivalency here in Hong Kong, it really has very little impact on what's happening within the business community and investors. So I think it's worth taking a look at. If you are an investor and you have a portfolio, ask yourself the question, how much money do you actually have invested in different parts of the world away from the United States? And certainly as we look at the United States right now, with a tremendous amount of concentration within just a few companies, NVIDIA, for example, one representing a huge share of the S&P 500 and bigger than Apple and Microsoft in terms of its own market cap. And, from our perspective at AWAME, we are, a little concerned about that level of concentration. And it may rhyme to issues that we saw back in 1999 during the dot-com craze. And so maybe the AI euphoria has essentially propelled these valuations to a similar euphoric and really non-rational level. And I would also encourage you to take a look at the National Bureau of Economic Research recent paper, which I also posted on LinkedIn and shared that link, which is a very excellent white paper that talks about the projection over the next decade of the impact of AI in the U.S. economy. And not to spoil it too much for you, but the conclusion is it's a very lukewarm impact on GDP for the United States. And that's mostly because the tasks and the work that it's really assuming, or that the workforce can essentially outlay to AI, isn't very complex. It's non-complex tasks, and these tasks don't necessarily in and of themselves add any significant value to the economy. What would add quite a bit is more complex tasks and more complex thinking. But as human beings, we're pretty much still responsible for all the creativity and innovation at this point in time. And really, that's the conclusion of this paper, in my reading of it, is that over the next decade, humans are still going to be very much responsible for the creation of things and the really important and very valuable things of inventing things and inventing solutions, whether it's on the goods side or services side. So that was a bit of, I think, an eye-opener for us when we saw that paper. Certainly resonates with us that AI is great and it's tremendous, but it's still very much at its infancy and may take decades to fully realize its true value within not only the U.S. economy but the global economy. When I was walking through one of the halls here in the hotel, it was more than interesting to me that I saw an AI conference being sponsored here by a group, and of course, AI is global. Everybody's jumping on this bandwagon in this discussion and looking to invest in this area, which is great, but it also is still very, very much at its infancy, with many, many implications and regulations yet to really take root, as we do see with most technologies or with most evolutionary steps in our economies. So with that, I will sign off for now, and thank you for tuning in to this month's market commentary and perspectives. And if you have any questions at all, always feel free to email us at info@alignwealthllc.com or visit our website at alignwealth.com. Thanks very much.